Hello friends, Jason here for TheChartGuys. If you've not heard of us, TheChartGuys is a community of 1,000+ amazing people. We love to talk about technical analysis and charts, and we're focused on education and teaching and financial independence through technical analysis. We never tell you what to buy, we tell you how to recognize setups and make your own choices, and that's what I think makes us unique. We want to help people and we want to teach trading through technical analysis. Anyway, DAL on the daily time frame, we've got a bear flag set up. A bear flag is when you have a big drop, you're oversold and you consolidate inside a channel, something like that, and generally it results in further action to the downside. So what we're focusing on is the fact that we get oversold conditions, and now we're just sort of responding and bouncing out of that. We're waiting to see if bears are going to resume their attack and see further downside action. We do have earnings, which looks like it is tomorrow. So that is interesting, and it's probably going to derail this pattern. But let's pretend that earnings is not tomorrow, and we're going to follow this through anyway. So what are we looking for in the daily time frame? Well, we want to see signs of continuation to the downside. On the 4-hour time frame, we can see that we've seen big aftermarket moves in both directions. We've got resistance at $55, and we've got some lows here, 52.88 and 51.81, and then our most recent level is going to be, well, let's grab another line here, 54.40. So what happens is we get a double top of 54.40, and then we look to the 15-minute and hourly time frame for a reversal, an indication that we're going to see downside movement. Should we fail to do that, then we're simply going to move our levels up until we find something that we pull away from, and those are how we establish our ranges inside equilibriums. So let's say we hold 54.40 as our double top resistance, we pull to the downside and establish a new higher low over 52.88, then we're going to mark that level as a key level for us, and we'll just add it in and continue to evolve this pattern and wait for one of these levels to break. So theoretically, and I like to visualize two people fighting on a schoolyard, a couple kids pushing each other around. One kid pushes one way, pushes the other way. Eventually one of them is going to win, knock him over, and then they got full reign of the chart. They can do whatever they want and take it, the price in whatever direction they choose, because the other players are not playing anymore. They're tired out and they can't push back. So that's what we're looking for on the 4-hour time frame. Are we going to get continuation inside this equilibrium or not? On the hourly, we are looking at a slight hourly uptrend, and in fact I'm seeing a bearish pattern here, and a bearish pattern I'm looking at is this ascending wedge type shape, which looks like this. And in fact we may just be in a nice little channel. So I'm going to draw both scenarios. And I'm more comfortable calling this an ascending wedge. An ascending wedge is a pattern that shows a tightening range in one direction, sloping upwards, and it often results in further downside. So what I'm seeing is a double top of 54.40 inside an ascending wedge shape. I would look for downside continuation, and then I would look for a loss of 52.88 to show continuation on the 4-hour time frame, which would have us breaking outside of our key levels and a loss of that equilibrium. And then a loss of that equilibrium, which sees us test 51.81, and there's not a lot of support elsewhere there. If we break to the upside and we break bull outside this EQ, we have major resistance at $55. Should we break above that, and earnings may do it for us, we don't know yet, on the daily time frame, that would completely negate this pattern. It would have us coming up and testing EMA 12 on the daily time frame, at which point we would no longer look at the bear flag. We would look at our 4-hour trends and our daily trends and try to make up a new pattern, new consolidation, and new ideas based on the recent price action. So ignoring the fact that we dropped, because the market says we've dropped here. This is where we belong. Now let's carve out some new price discovery through some price interaction. Anyway, that's what I've been looking at on DAL. Earnings is probably going to throw that off. Let's see how wild we moved last earnings. You know what? Not too much. This one certainly had an impact. No, it did not. That earnings, you know what? Maybe we'll open right on target, and we'll see what happens tomorrow. Anyway, based on the daily time frame, based on that hourly time frame, and based on those key levels of resistance, I would be leaning bearish on DAL. We'll see if I'm correct, and if I'm not, we'll do another video about what the indicators were to suggest a movement to the upside was imminent. Anyway, thank you for watching.